So how accurate are the reactions coming in social media? How severe is the extent of the slowdown over in China? Let's pick this up with Nick again. So we had a trio of weak data coming out of China, both retail sales. We also had fixed asset investments and even industrial output coming in a tad weaker. What kind of impression do you get when it comes to the Chinese data points?
Yeah, I mean, it's very clear that there's a slowdown. It's really been a trend slowdown since about 2010, so it's been underway for a while. What it suggests is that probably there will be more policy easing, probably another 1 or 2 interest rate cuts, probably some cuts in the reserve requirement ratio, and they may even allow the currency band to widen a little bit.
Is the severity of the real estate slowdown, is that factored into the market?
I think a lot of it's in the price. I mean, valuations have been derating for a long period of time as well. So I think the market is, as you say, it is probably a consensus belief. I guess the question is more from a macro perspective, will the authorities allow the currency to depreciate? I mean, we've seen, well, we just talked about dollar strength. The dollar strength has primarily been against the euro and the yen so far.
Right.
Whereas if you look at Asian currencies, the Asian currency basket, which China dominates, it hasn't actually depreciated that much.
If China gets thrown into the EM currency route, what is the impact?
Well, I think I think the potential downside is probably more now in some of the other Asian currencies, the currencies that are related to China in this region. And we've seen, a couple of policy easings this week by the Central Bank of Thailand and Korea. So I think currency weakness, broadly speaking, in this region could accelerate a little bit.